Chart patterns. That's exactly where many people start their journey with technical analysis. Do you want to know how to recognize them and how effective each of them is? Let's get started. Hey there. Welcome to another episode of Crypto Market Analysis, where we usually meet to analyze Bitcoin, Ethereum, and an altcoin chosen by you. However, today, for the second time this summer, we'll be dealing with a special episode. It's special because we'll be talking about chart patterns, the ones that appear most often, the 10 most popular, and exactly what to expect from them. If you're interested in this kind of content and it's your first time here, please subscribe, give a thumbs up, and hit the notification bell. And remember, the information in this material does not constitute investment advice in any way. Nevertheless, this is common knowledge. If you agree with that, grab your coffee and let's get started. This bull market is special. Why? Because on the Bitcoin chart, we don't see as many typical trading patterns as we did in the past. Nevertheless, they do appear on the charts of altcoins. And sometimes, for example, I mentioned the rectangle pattern. This time I'll illustrate it on a different chart, and that chart will be gold. Gold, which is currently on the verge of breaking out from just such a pattern. The rectangle pattern is primarily a trend continuation pattern, which means that, as in this case, we can clearly see that there was an upward trend, then a slowdown of that trend and a consolidation. Consolidations have also been occurring very frequently on Bitcoin lately, and very clear bounces off specific horizontal levels. There is a clear resistance here, a clear support here, and what happens here is so-called range trading from band to band. We know exactly where to sell, we know exactly where to buy, and in this case, gold is moving in a very clear manner. Well, this pattern can be identified by the wicks. Here, I marked it basically based on the candle bodies, because in my opinion, it's actually clearer when you define it using the candle bodies. From this kind of pattern, a breakout to the upside most often occurs, and an upward breakout happens in 65% of cases, so that's quite a lot. This tells us that simply what is happening, the upward trend that is ongoing here, will continue after this pattern breaks out and is confirmed from above. So it's actually quite clear. Of course, I want to emphasize that it's generally accepted to say that technical analysis works in 70% of cases. Of course, if it is correctly identified, and in this case, we are starting with a pattern that has a slightly lower effectiveness, 65%, but still remains high. Another pattern that also has a 65% effectiveness rate is the descending triangle. The descending triangle is the kind of pattern that we currently have in front of us on the screens. This example is taken from Kanga University. If you're interested in Kanga University and want to gain knowledge in technical analysis, I encourage you to check it out. There is a lot more interesting material there, but above all, what characterizes such a descending triangle? Here we have a movement that started from below. This is less common. More often in this case, we see a movement coming from above that forms this kind of pattern. This is also a trend continuation pattern, but most often of a downward trend, which means that the price comes down from above, enters the triangle, bounces nicely off the horizontal support, and the peaks that are formed here become lower and lower each time. From such a pattern, a breakout most often occurs around 75% of the length of the formation, so if we draw it, we can more or less determine where the breakout will happen. Here we see this area below 25%, and indeed the breakout is drawn here. Moreover, from this formation, you can also measure the range to which the formation will reach. All you need to do at this second bounce point, just as we have it here, is to measure the height of the triangle and transfer it to the point, or rather to the point from which the breakout occurs. Then we will be able to easily verify what the price target is. Importantly, in such a triangle, in a descending triangle, confirmation of this triangle very often comes from volumes. And here we have these volume bars drawn at the bottom, which are present during the consolidation that occurs here within the descending formation. And very often we expect such confirmations in many patterns. Another formation characterized by a 67% effectiveness is the rising wedge, a formation that can very often indicate to us that the trend, attention, might reverse. 67% is actually quite a lot. In front of us, we have such a rising wedge on the Bitcoin dominance chart. And just a heads up, this isn't a perfectly drawn wedge, but this chart also isn't a perfect reflection of Bitcoin's actual dominance. But nevertheless, we can see very clearly here that there is a broad area which narrows as Bitcoin's dominance moves upward. And from this area, a breakout occurs. As for the range, we measure it exactly the same way as with a triangle. In the case of the second bounce, we measure the height of this wedge. We are able to apply this height at the point where the breakout occurred. And based on this, we can determine the price target, or in this case, the dominance target to which Bitcoin may currently fall. Wedges are very clear formations and appear very frequently on charts. Well, 67% sounds a bit low. Personally, it seems to me that when I observed it, the effectiveness was much higher, but the book states 67%, so let's stick to that for now. The falling wedge has an effectiveness of 68%, so that's 1 percentage point higher, and we observed exactly such a pattern on the Bitcoin chart, which played out just perfectly. It was the bear market of 2022 when we were observing exactly what is drawn here. Again, a bearish formation that was nicely drawn between two lines, and it was narrowing. When a breakout occurs from such a formation, we should observe increasing volumes, and that's exactly what happened here. That was it. That was a clear signal for me that in this case, the bear market was ending and Bitcoin was once again entering a growth phase. And that's exactly what happened. 68% effectiveness, and as we can see, the wedge once again worked perfectly. I realized that sometimes it's easy to get confused with formations. A moment ago, we talked about the falling wedge, which tells us that the price may rise, and in a moment, we'll be talking about the ascending triangle, which also indicates that the price may go up. That's why I encourage you to visit Kanga University again and gain more knowledge there. And now, as I mentioned, the ascending triangle. So we have a situation like the one shown here on our screens, where we have a trend that most often comes from below and hits the resistance. This resistance is a horizontal resistance, and very regularly, very often, the price bounces off it. The more often it bounces off, the weaker this resistance becomes, of course, and the higher the probability that it will be broken. This probability simply keeps increasing. In addition, at the bottom, we have an upward trend line, and the price also bounces off this upward trend line, which indicates that demand is appearing at increasingly higher levels. And just like in virtually every formation, here too we are dealing with declining volume, which tells us that consolidation is ongoing and we are waiting for an impulse to break out. Similarly to the descending triangle, here as well, the breakout from the formation should occur about 25% before the end of the entire triangle. And based on the second point, the height of the second point relative to the whole triangle, we are able to determine how high the price will soar. Personally, as you probably know, I'm not a fan of price targets, but it's still worth mentioning that such elements can be derived from these formations. The ascending triangle already has a 70% effectiveness rate, and the symmetrical triangle is characterized by exactly the same level of effectiveness. One of my favorite formations that you can find on a chart, and we observed such a formation, for example, on Ethereum back in 2021. And attention, symmetrical triangles are continuation patterns. So here we have an uptrend, a consolidation, and then a breakout, but very often this is actually the last formation in the entire cycle of any formations in a long-term upward trend, which may mean that after breaking out from this formation, after reaching a new peak, that peak might actually be the ATH in the long run. And in the case of Ethereum, for a while, that actually was the ATH. However, the actual ATH was reached a bit later. Anyway, getting back to the triangle itself, we see a similar pattern. We see ongoing consolidation within the triangle and a breakout that occurs earlier than 25% before the end of the entire structure of this formation. From this formation, we can also once again determine where the breakout is heading. All you need to do is measure the second point of contact of this triangle, the second rebound point in the triangle, and measure the height of the triangle in this way, then apply it to the point from which the breakout occurred, which is exactly here. On this basis, we are able to determine the minimum range to which the price is heading. As we can see, this range is exactly here at 2,550 in the early period, and that's precisely the level Ethereum's price reached. So this is basically a textbook example of a typical symmetrical triangle. On the other hand, the double top as well as the double bottom are characterized by a 78% effectiveness rate. In this case, we'll talk about the double bottom, which essentially reflects exactly the same thing that happens with the double top, only in a reversed trend. And now, in simple terms, we have a chart of Chainlink in front of us. Chainlink, which in this case at these points here experienced a double bounce. We had a downward trend, and from this downtrend there was one bounce, an upward movement, then a second bounce, and these bounces are at a very similar level. Very often in such a situation, we can also observe factors appearing on the RSI, such as, for example, divergence. In this case, maybe not a divergence because we have a lot of these price bars, but rather a momentum discrepancy. For example, let's take a look at how it looks exactly on the RSI, although I expect that in this particular case, we didn't have such a divergence, and indeed, there isn't one. Nevertheless, just to be completely clear, let's draw a line here that will reflect exactly our double bottom. And we can see that here the RSI actually reached the level of 30. Well, if the RSI had dropped a bit lower here, it would have been an even clearer double bottom because we would have a divergence compared to what we see on the price chart. In any case, a double bottom is a trend reversal pattern, and it indicates that when there is a breakout from this second bottom and the price soars higher, above the peak that was reached during the formation of the double bottom, and that peak is tested from above, then this upward trend can continue and will most likely be continued with strong momentum. And that's exactly what's been happening with Chainlink in recent days. As for the double top, let's imagine the exact opposite situation. The price reaches a certain value, bounces off it, then bounces off it again at a later time, and simply falls lower. So 78%, double top, double bottom. Not bad at all. We'll definitely be looking for these kinds of patterns soon on cryptocurrency charts during Kanga trends. Time for the second to last pattern, the inverted head and shoulders. One of the funniest sounding patterns, but extremely effective because it's estimated to have an effectiveness of up to 89%. What does it tell us? First and foremost, the inverted head and shoulders is a trend reversal pattern. So for example, in this case, as we observe the chart of the fetch cryptocurrency, we were dealing with a downtrend here, and at a certain point in this downtrend, 3 rounded formations appeared. The first is the left shoulder, then the head, and here we have the second right shoulder. Very often during the formation of such a pattern, the right shoulder is smaller than the left. Moreover, from this pattern, we are able to determine exactly to what price a breakout may occur. All you need to do is measure, similarly to the case of a triangle, the height of this formation, for example, at this point. Well, here I would actually have to draw it out exactly like this. We measure the formation here and align our line to the breakout point. And at the breakout point, which is located right here, we are able to determine the minimum price our cryptocurrency or any other asset we are trading could reach. And indeed, that price target was reached. But be careful, with the inverse head and shoulders pattern, mistakes in interpretation are very common. Above all, it's important to pay attention to the volume because it's the volume that confirms whether the inverse head and shoulders is legitimate or not. I've seen many technical analyses that claimed an inverse head and shoulders was forming on the chart, but in reality, the volumes were consistently decreasing. In this case, the volumes, when the right shoulder is forming, should actually be increasing. Whether it's the head or here, the breakout from the head already showed increasing volume. The right shoulder was also increasing. Sometimes, unfortunately, that's not the case, and these patterns aren't legitimate. In any case, here we have a textbook example of what an inverse head and shoulders pattern should look like. And this is a very important pattern because during a bear market, we often look for exactly these on cryptocurrency charts in order to accumulate crypto at the best prices. However, it's worth mentioning that this pattern can also serve as a trend continuation pattern when the trend is upward. Yes, that can happen. If we are dealing with an uptrend and then an inverse head and shoulders appears on the chart, it very often signals a continuation of the trend, not necessarily its reversal. In any case, this is a classic example of a trend reversal, and that's what we will most often be looking for. Since we've dealt with the inverse head and shoulders, now it's time for the head and shoulders pattern, which has a 93% effectiveness rate. And note, this is a pattern that even appeared on the Bitcoin chart during one of the local peaks in 2021. We remember that the bull market peak was reached in November, but already in April, this pattern appeared on the chart and confirmed for us that a local peak existed at that moment. A very simple pattern, basically the reverse of what we just talked about. So we have 2 shoulders, the left shoulder, the right shoulder, and the head in the middle. Very often in such situations, it's worth paying attention to the volumes, and these volumes should be decreasing. And here we can also see that as this pattern forms, the volumes are consistently decreasing, and the right shoulder is lower than the left shoulder. This can result in such patterns being broken and declines occurring, declines that can also be measured very easily. You just need to draw a line at the height of the head, check how high it is, and transfer it exactly to the breakout point. And we have the minimum range of the price drop that can be achieved in this case. Let's also remember that such patterns with 93% effectiveness are the kind of elements we should look for when we expect the end of any upward trend and possibly also the end of a bull market in Bitcoin. But such patterns also occur as trend continuation formations. In a situation where we are dealing with a prolonged downward trend, then a head and shoulders pattern may appear, and it will indicate to us that the declines will continue. I realize that the knowledge I presented today may be a bit complicated for some of you, but you often ask about it in the comments, so I felt obliged to share it with you. Nevertheless, I strongly encourage you once again to visit Kanga University and find out exactly what technical analysis is, especially if you are just now taking your first steps with it. And if you, dear viewer, are already well versed in technical analysis and trade based on chart patterns, please let me know in the comments which patterns are your favorites. Maybe there are some that I haven't mentioned here. Perhaps I'll cover them in future videos. So the comment section is open. I'm curious to hear your opinion. And that's all for today. If you enjoyed this, and I truly believe you did, and it's your first time here, be sure to subscribe and please rate this episode on a scale from 1 to infinity, where 1 means it was weak, it shouldn't have happened, and infinity means you want to see more. Infinity means it's fantastic and I want more of it. If you want more, we'll see each other next week with a traditional analysis. Bye.